What's the first step in home buying? All right, say it with me. Getting a pre-approval. Stay tuned. Hey everyone, Vasilios here, and you're watching Fastlane Realty. Today we're talking about the pre-approval process. If it's your first time on this channel and you want to get the latest actionable tips from a local realtor that'll actually save you time, save you money, and result in a smooth real estate deal, then hit the subscribe button below and that little bell notification so you don't miss any content. Now on to it. The pre-approval is one of the first steps when you're looking to buy a piece of property, even before you start searching. This is so you can know what you're able to afford and look at, and if you like a piece of property, you can actually act upon it. But first, how to get started in your pre-approval process. Go to the bank, right? A bank, yeah, seems sensible, right? So you go into the bank and you bring in all your information and paperwork, and they give you an option or two. An option or two is good, but you can do better. Or you can talk to a local mortgage or lending broker. Why a broker, you ask? Well, simply, they work with more than one institution or bank and can give you the most options. And when it comes to lending, more options tends to equal a better chance at getting the financing that you need. More options is more good, right? What are lenders and loan officers looking for from you? Number one, your debt to income ratio. They are going to look at what your ongoing monthly obligations are that you owe and by how much you have left after. Debt over income equals debt to income ratio, or your total monthly bills over your gross total income. Next, banks will look at what you have available for down payment. Some lenders offer low down payment loans. FHA, for example, is about 3.5%. Another example would be a conventional loan, anywhere from 3 to 20% down. What does that mean for your average home? Current home values are at about $350K for a home in Milford. 3.5 down on 350 is $12,250 versus $70,000. This is just a small example of the variation in loan types, rates, and terms, but we can dive deeper on that in another video. Many lenders look at the 5 C's. No, not the diamond ones. The lending 5 C's: character, capacity, credit, capital, and collateral. Capacity means how much you can actually afford. Lenders will look at various documents to make this assessment. Documents a lender or a bank may ask of you to get approval may include letter of employment, pay stubs, direct deposits, 1099s, asset statements, records of rent, records of divorce, bankruptcy, foreclosure, your tax filings, and W-2s. A 2-year history is generally required, but not always. The next C is credit. This simply is your credit score. Too low and you might need a cosigner. Talk to a lending broker ahead of your purchase so they could set you on the right path. The next C is collateral. Now, collateral is generally the actual property itself. Collateral is a property or an asset that a borrower offers as a way for the lender to actually secure the mortgage. Character is when the lender takes a look at your past credit history and determines your credit character in your ability to promise and follow through with the agreement on paying your mortgage. Capital, of course, refers to the actual asset: cash, savings, investments, income, etc. Also, the bank will ask you if you will be living in the home. Now I know, V, what are you talking about? Of course I will. Well, if it's an investment property, the terms of the mortgage will also change. An investment property is a higher risk than an owner-occupied. The bank will curb that risk by asking for more money down or different rates or terms. This is just something to consider. A lender will also check to see what you have in reserve funds, usually 3 to 6 months worth of expenses as a backup in case of a life circumstance arise. The bank will feel more comfortable that you are able to sidestep such issues and make sure you're able to get back on track. A lender will also look at any investments or savings you have: 401k, an IRA, and CDs if those are still such a thing. Next up, credit score. Your credit needs to be relatively healthy. Banks may work with you if you're in the low 600s. It's probably best to be in the 700s to get the best possible rate. However, if you find yourselves in the 500s, it's best to work on improving your credit before applying or getting a pre-approval. Many mortgage brokers have information on types of programs to aid in credit fixing, so it's beneficial to start the letting process early before you start looking, especially if you fear that your credit is not where it needs to be or where it should be. How do you find a good mortgage broker? Well, there's Google, as always, but you want someone you can actually talk to that isn't part of a massive call center. Now, you want to have this broker to have experience and volume just like your realtor. I recommend a local mortgage broker that you can talk to at any time and will solely walk you through the entire process from start to finish. And you won't just get passed on to the next chain of command down the line. One broker, one phone number, available to talk you through all of your questions. If you check down in the video description, we have our in-house lending expert. She does wonders for my clients. Super professional and personable. Definitely give her a call. Check down below. Now that you have your approval letter in hand, get with your local real estate professional and start searching for that dream property. And check out these videos. Till the next one.